In this video, I'm going to walk you through the very real legal dangers of abandoning or ghosting your limited liability company, and more importantly, what you need to do right now if you've already done it. I'm Santiago Cueto, board-certified international business law expert and best-selling author. And over the years, I've seen countless entrepreneurs get blindsided by problems they never saw coming simply because they didn't properly close down a business entity they were no longer using. All right, so first, let's talk about what I mean when I say ghosting your LLC. You formed this company. Maybe you filed the paperwork yourself online with the Florida Division of Corporations. Maybe you've hired an attorney. Maybe you used one of those legal document services. You have your certificate of formation. Maybe you have your EIN from the IRS. You felt official. You felt like a real-world business owner. Congratulations. But then things changed. The business never launched, or it launched and it failed. Or you just lost interest. It happens to all of us. And here's where the ghosting happens. You stop doing anything with the company. You stop filing tax returns. You stop paying the required fees to the state. It's like buying a domain name on GoDaddy that you just never use and you just let it sit there. You definitely stop holding these annual meetings that your operating agreement probably says you're supposed to have. The business just sits there like a zombie entity, technically alive in the eyes of the law, but not really functioning. And I get it. When something isn't making money, the last thing you want to do is spend more money or more time on it. It feels easier to just walk away and pretend it never existed. But that LLC you formed, it doesn't just disappear because you've stopped paying attention to it. In fact, that's when the problems start to multiply if you're not careful. Let's start with the most immediate consequence specific to Florida, the annual report requirement. Under Florida Statute Chapter 605, every LLC registered in Florida must file an annual report with the Division of Corporations. This report is due between January 1st and May 1st each year, and the filing fee is currently around $132. That may not sound like a crushing amount, but here's where Florida business owners get into serious trouble. When you ghost your LLC, you're not filing this annual report. Florida doesn't send you a paper reminder anymore. They send an email to whatever address you had on file when you formed the company. Now, if you've changed emails, moved, or you've just not paying attention, you're missing these notifications, these reminders. Now, after the May 1st deadline passes, Florida imposes a $400 late fee on top of that annual report fee. So now you're looking at over $500 for something that would have cost you just $138. But here's where it gets even more problematic. Now, if you continue to ignore the requirement, Florida will administratively dissolve your LLC. Under Florida law, this typically happens after 3 years of non-compliance. You might think, great, problem solved. The state closed it for me. But administrative dissolution in Florida doesn't make your obligations disappear. Here's what many Florida business owners don't understand. Even after administrative dissolution, your LLC still exists in some sort of legal limbo. You can't do business under the name anymore, but you're still potentially on the hook for penalties, and anyone who had a claim against the LLC before dissolution can still pursue those claims. The state will also send any unpaid fees to the Florida Department of Revenue for collection, and these debts can be reported to credit agencies. Now let's talk about taxes, because Florida has some unique aspects that make this even more important. The good news is that Florida doesn't have a state income tax for individuals or most LLCs, but that doesn't mean you're off the hook entirely when you ghost your Florida LLC. First, you still have a federal tax obligations. The IRS doesn't care what state you're in. When you form an LLC, depending on how you've elected to be taxed, you may have federal tax filing obligations. Single-member LLCs are typically treated as a disregarded entity for tax purposes, meaning the income flows through to your personal return, but multi-member LLCs are treated as partnerships by default, which means they need to file a Form 1065 every year, even if there was zero activity. When you ghost your LLC and don't file these returns, the IRS starts sending notices. The penalties for not filing start over $200 per month per partner. So if you have two partners and you don't file for 3 years, you're looking at penalties in excess of $15,000. And that's before we even talk about any actual tax you might owe. But there's a Florida-specific tax issue that catches people off guard: the Florida sales and use tax. If your LLC was registered to collect sales tax, which is required for most retail businesses, restaurants, and many service-based businesses in Florida, you have ongoing filing obligations even if you're not making sales. You need to file returns even if there are zero returns until you officially close your sales tax account with the Florida Department of Revenue. All right, time for a quick break. If you're finding this information valuable and maybe a little scary, do me a favor and hit that like button. And if you want to make sure you never miss crucial legal information that could save you thousands of dollars, subscribe to my channel right now. All right, so if you ghost your LLC and don't file these returns or close the account, Florida assesses penalties and interest. I've seen Florida business owners who thought they'd walk away clean discover that they owe thousands of dollars in sales and tax penalties for returns they never filed, even though they never made any actual sales during those periods. Now, the Florida Department of Revenue is aggressive about collecting these debts, and they can place liens on your personal property to collect them. Now, here's something that keeps me up at night for my Florida clients. When you ghost your LLC and it gets dissolved, or when you stop maintaining it properly, you can lose the entire reason you formed the LLC in the first place: liability protection. Florida's LLC statute, Chapter 605, provides significant liability protection for LLC members. Under Florida law, members of an LLC generally aren't liable for the debts and obligations of the company, but courts can pierce the corporate veil when the business isn't being operated as a legitimate, separate entity. Florida courts look at several factors, including whether you've maintained proper separation between personal and business affairs, whether you've adequately capitalized the business, and whether you've followed required corporate formalities. If you've ghosted your LLC, you're definitely not holding meetings, and you're not keeping records, you're not maintaining separate bank accounts, and you're probably not filing the required annual reports. Under Florida case law, courts have repeatedly held that failure to maintain these formalities can be grounds for piercing the corporate veil. That means they can go after your personal assets. Now, there's a Florida case that illustrates this perfectly. A business owner formed an LLC, signed contracts, then abandoned the entity without proper dissolution. When the creditors sued, the Florida court allowed them to pierce the corporate veil and go after the owner's personal assets, specifically citing the failure to maintain the LLC as a separate entity and the failure to follow the statutory requirements. This is the ultimate irony of ghosting your LLC in Florida. You formed it to protect yourself from personal liability, but by abandoning it improperly, you've actually created more personal liability than if you've never formed one at all. So what should you do instead? If you have a Florida LLC you're no longer using, you need to formally dissolve it following Florida's specific procedures under its laws. First, if your LLC has multiple members, you need to get authorization to dissolve according to your operating agreement. Usually this means a vote of the members. For single member LLCs, you as a sole member makes this decision. Second, you need to file articles of dissolution with the Florida Division of Corporations. You can do this online through the Sunbiz website, which is Florida's business entity database. That's sunbiz.org. Now, the filing fee is currently $25, which is remarkably reasonable compared to what you'll pay in penalties if you just ghost the company. You'll need your LLC's document number, which you can also find on sunbiz.org. Third, you need to wind up the business affairs. This means paying or making provisions for all of your LLC's debts and obligations. Notify creditors that the LLC is dissolving. Under Florida law, you should send written notice to known creditors, and you can also publish a notice of dissolution in a newspaper to cut off claims from unknown creditors. And fourth, close your Florida sales tax account if you have one. You need to file a final sales tax return with the Florida Department of Revenue and officially close that account. Don't skip this step. It's crucial for Florida businesses. And fifth, file your final federal tax returns. Mark them as final returns so the IRS knows to close out your account. If you had employees, you'll also need to file final employment tax returns. I know it's a lot, but it's all going to be worth it. Finally, cancel any business licenses. Close your business bank account, cancel your registered agent service if you used one, and notify your insurance company. Make sure you've properly transferred or disposed of any business assets according to your operating agreement. Now, the entire dissolution process in Florida is straightforward and costs just $25 in state filing fees if you do it yourself. Compare that to the thousands of dollars you could end up owing in penalties, collection issues, and potential personal liability issues if you just ghost your LLC. Look, I understand the impulse to just walk away from something that didn't work out. We've all been there. But when it comes to Florida LLCs, walking away without formally dissolving the business creates problems that will follow you for years. The annual report penalties, the credit damage, the potential sales tax issues, the loss of liability protection. None of it is worth avoiding the relatively simple and inexpensive process of proper dissolution under Florida law. If you're sitting there right now realizing you ghosted a Florida LLC, don't panic, but also don't wait. The longer you wait, the more those penalties accumulate. Go to sunbiz.org today and start the dissolution process, or contact a Florida business attorney who can handle it for you. It's one of the smartest investments you can make to protect your financial future. Now, if this video helped you understand the serious risks of ghosting your Florida LLC, please hit that like button. It really helps other business owners find this information before they make a costly mistake. And subscribe to my channel for more practical legal guidance that can protect you and your business. I'm Santiago Cueto, your Florida business law attorney. Click on the video I've linked here, and I'll see you in the next strategy session.